Oh yes, indeed. Big one coming out with numbers and a big indication for the market as what TCS says and does would be an important cue for the rest of the IT sector and generally on how earnings would pan out because the IT sector has held out so far in terms of growth. But Sandeep Muthangi, who's VP Research at India Infoline Institutional Equities, joins in with a quick perspective on what to make of the numbers. Sandeep, great to have you on the show. What do you expect Q1 for IT companies to look like? Will growth trends be very divergent, largely due to client-specific issues and region-specific issues?
You're bang on that. I think the growth trend will be divergent. In fact, this time around, I've titled my preview note as a polarized quarter. This is one of the most polarized quarters that we will be seeing in quite a while. Client-specific issues are the key reason. Some companies have again highlighted client-specific concerns. Tech Mahindra has highlighted a client-specific concern. Wipro, it's a seasonally weak quarter. They've given a guidance which is somewhere around the flat growth for the quarter. So Wipro and Tech Mahindra should be weaker quarters. And for HCL Tech, TCS and Infosys should be reasonably healthy. TCS once again should be the best performer in 1Q. I expect a revenue growth of 4 to 4.5% for TCS. Infosys and HCL Tech slightly lower, about 3%. Overall, if you see, these trends are broadly similar to what these companies have grown last year. Slight moderation for TCS, but otherwise they're very similar to what these companies have grown last year. Of course, Infosys and Tech Mahindra are exceptions.
Sandeep, you preempted my next question on TCS numbers then. How important is the Q1 performance, especially when the company has disappointed for the last 3 quarters?
See, the thing with TCS is not with TCS, it's with the expectations. Expectations are always pretty high for TCS, and because it's been the fastest growing company for quite a while now, or among the top 2 fastest growing companies for quite a while now. For this quarter, I don't think expectations are very high because the consensus is looking at a moderation of growth over last year. Last year, same time, they did close to 5%. This time, the consensus expectations are close to 4%. So I think there is some moderation in expectations that have happened, which one of the reasons is, again, the past 2-3 quarters meeting or slightly lower than consensus expectation kind of a result. So I think this time around, the expectations are pretty realistic. And if they don't do a 4% number, if they do somewhere around 3.5% or something like that, then I think it's a significant negative surprise. On the other side of the equation, if they do more than 4.5%, 5% revenue growth for the quarter, I think it's a significant positive surprise.
You know, the thing is, Sandeep, TCS doesn't give out guidance, but what would you watch out for in the management commentary? Perhaps the body language, whether they're looking confident about the environment or not, because they have alerted the market on, managing expectations on earnings for this year. And what will make you change your reduced rating on TCS, more importantly, in these numbers?
Yeah, that's a good question, actually. See, the recommendation on the stock is primarily because of the valuations. And TCS valuations are at a significant premium to the other companies. And that's essentially the call on the reduced recommendation. The thing that would make me really interested about that is if there is a significant acceleration in the revenue growth. As of now, indications from the management commentary and their commentary on the demand is that revenue growth will probably be very similar to last year, probably a slight moderation over last year. The key things to look for are commentary on 3 verticals: manufacturing, retail, and BFSI. BFSI, they came out with a very categorical comment last quarter that their growth rate, BFS growth rates, will be on par with the company's average growth rates. Fairly strong comment, so any update on that will be very interesting. Retail has underdelivered last year. Again, management has been commenting that some of the digital spends have been postponed or deferred, and most of the deals could happen this year. So that's an interesting comment to look at. That's an interesting vertical to look at. And manufacturing has been on a tear last year. So any comments around that is definitely interesting. It's the second largest vertical for most of these companies. So commentary on these 3 verticals. And of course, on the service line side, you'll have the usual commentary around digital. But one thing that will be interesting is going into the quarter, Accenture's given a fairly strong result. And they've been at least mentioning that digital is a large part of why they've been having fairly strong growth. So far, Indian IT has mentioned, but we are yet to see digital being a large part of Indian IT's growth rate. So any commentary around that will be keenly watched for.
Sure, and Sandeep, what about Infosys? Your report talks about less 3% revenue growth is a risk, and the management in recent interactions sounded very confident of achieving FY16 guidance.
Yeah, I think commentary at Infosys has improved during the quarter. When they gave the guidance at the end of 4Q, it was very clear that they were looking for a 2H pickup to deliver their guidance. But there's a slight change in the commentary during the quarter that they're looking for not a 2H pickup, but 2H also to be as good as 1H. So I think there is some improvement in the visibility, etc., that the management has seen. So expectations are obviously pretty rich at about 3.5% growth for the quarter. I think less than a 3% growth will make it very difficult for them to meet their yearly guidance. Even a 3% growth will mean the guidance is challenging, but less than a 3% growth will mean a significant risk to their guidance for the full year.
Thanks, Sandeep. Thanks very much for joining us and giving us your perspective on TCS's earnings. Appreciate your views. Europe is opening trade. We've seen a bit of a bounce in China, and the European markets are also stabilizing, up about 0.5%.